Hello and welcome to Big Deal. Now, equity markets are surging, largely buoyed by the domestic institutional investors, revved up by the large influx of investments in mutual funds. Now, on the other hand, the homegrown PE VC investors struggle to raise domestic funds to fuel the growth of our own entrepreneurs. So the big question today on Big Deal is how can we achieve Atmanirbharta in fueling India's growth story? And to discuss this, I'm joined by three gentlemen who are expert on this particular topic. Let me welcome on the show TVS Capital Fund's Gopal Srinivasan, Gaja Capital's Gopal Jain, and Anicut's Ashvin Chadha. Gentlemen, so good to have you on CNBC-TV18. Now, Gopal Srinivasan, to begin with, why this discrepancy while it is very clear that there is no dearth of savings or investment sentiment in the country?
Hi, Nisha. Great to be on the show as always. India has got roughly about 4 trillion rupees worth of commitments made from rupee capital to private equity and venture capital funds. We know this thanks to the wonderful new data from SEBI, which came out last month. Just think about comparing this with 110 trillion rupees that is coming from mutual funds, that is domestic institutions, and from retail into public markets. That gives you a very, very, very clear idea. When you compare the amount of private equity investments made each year, most of the time they're more than the total fresh IPOs raised, which is a comparison benchmark to ask the question, why this 15 to 1 difference between public market investments and private equity, when we know, again, thanks to SEBI, that the top quartile funds are all returning north of 20% IRR. That, I think, is a puzzle which we have all been working on to solve so that we can get more Indian money to VCPE. And most importantly, we need 100 more VCPE funds to reach the $10 trillion GDP goal, which by itself needs about 40 trillion rupees worth of capital from private equity and venture. I know I'm throwing a lot of numbers here. All I'm saying is we need more funds, we need more fund managers because we need more enterprises to come from more entrepreneurs. And therefore, rupee capital is the only one that is close to the issue, who a rupee capital institutional manager can assess a Gopal Jain or a Gopal Srinivasan or Ashvin Chadha when we are first-time managers and say, you know what, I think you guys will do a great job. We will give you money. But when that is scarce, the institutional domestic capital, then we are not going to find these managers. Can really New York bus drivers, pension fund judge who the next new manager in India should be? Or can it be done better by a SBI or a SIDBI or any other institution in India? That is the question.
So, Gopal, you've made your point very emphatically, backed by data as well. But one thing that stands out to me as an Indian is also that are we exporting a large part of growth that PEVC money has made out of our own Indian entrepreneurs' growth story and their ability to create value? Gopal Jain, you would like to take that question?
Absolutely. So that's currently happening. If you see our private sector, a very vast swath of the unlisted private sector is owned by foreign capital. Very similar to the situation, Nisha, in public markets, let's say 10, 15 years ago. Today, domestic institutional investors have emerged as larger investors, and we have Indianized the holding pattern of listed companies. If we don't take corrective measures, if we don't do these stroke of pen reforms, and if we don't connect the Indian venture capital private equity sector to the Indian savings, then, today, just as most of our unicorns are owned by foreign investors, even few from 4 trillion to 10 trillion, our unlisted private sector will be owned by foreign capital. There is nothing wrong with some of it being owned by foreign capital. The question is disproportionately owned by foreign capital.
That's right. In the middle, Gopal, we had seen also that the Indian entrepreneurs or the Indian large business houses or corporates had stopped their capex cycle and even M&A. And a large part of our companies and a bulk of that really went to the foreign private equity as well. So the ownership is definitely there, and it's the data is right there for us to see. Ashwin, also introducing you to this particular discussion. What are your views, and how does a breakthrough really happen in this? Because, the mutual fund investment culture really came in after demonetization to a large extent. And of course, the kind of potential the Indian equity markets showed. According to you, what can be a breakout moment to achieve this in the private space?
Yeah, Nisha, I think thanks for having us. I'm seeing more and more participation from retail in private markets. We have to get more larger ticket sizes from institutions also. There have been, SIDBI has been at the forefront. They've anchored our first fund and have been supporting a lot of new fund managers. Like that, we need many, many more organizations. I think, as Gopal mentioned, if you see the returns, this has been a very lucrative investment avenue for the first few set of investors. I have no doubt in the next 5 or 10 years, we will have significant amount of rupee capital backing unlisted companies through funds. Unfortunately, have we lost in the next 5 or 10 years? Will we lose many, many more potential unicorns to foreign capital? I think that's the question we all need to answer. Typically, the first set of institutions make the most money. So if we can do this now, as opposed to 5 or 10 years from now, I think we will see a lot of that money recirculate into back into Indian companies.
Yes, and Ashwin, also with the kind of momentum that the Indian economy is seeing, and with the elections behind us, everybody is expecting, or at least exuding, the confidence that the next 5 to 10 years is going to be a secular growth run for India, and Indians themselves can really capitalize on it in the true sense. Now, Gopal, Srinivasan, I want to ask you, you recently raised funds, you had gone through the whole exercise. How has been your experience, and what percentage of your fundraise really came from domestic, and what percentage from foreign capital?
Nisha, we were very lucky. In 7 months of SEBI approval, we've been able to raise about 2,300 crores of pure rupee money. We have never taken a dollar in any of our funds by choice, because we're a mission mode company for India. What I really want to use that is to focus on a simple idea that Gopal, Jain, Ashvin Chadha, myself, we were all first-time fund managers. We did not come out of any other fund management platform. We always basically sort of learned to raise a fund by our own. We have got about 60 new micro VCs since COVID, but we need 200 more people. And I think if only the established, and I would use a word that my teenage children used to use, entitled managers, can raise money easily, because we have a track record. This is my fourth fund. I can give some numbers. I can show a team. I know my LPs. For example, in the 2,400 crores we raised for our first close alone, I think 87% is from existing investors. What are the new managers? India needs those managers, because unlike in public markets, I'm not saying entirely like unlike public markets, but much more than public markets, it's the skill of the Ashvin Chadha who comes from a family in Delhi to go establish an office in Chennai and Bangalore, find these new companies, or a Gopal Jain coming out and doing this. We need 100 of them. And if we don't have domestic capital, we don't get those fund managers. Actually, that's what worries me more. Maybe I'm one of the older people in the industry by age and may not be by experience a lot. But how do we do that? I think that is the question. I feel like a minister in the 60s government worried about small-scale industry, because it is from the small-scale industry that the giant industrialists came. That was a nursery of entrepreneurs. Where is this nursery of fund managers? We say, boss, मैं आपको 10 रुपया दूंगा, आप 50 रुपया invest कीजिए in selected industries. We are actually, our development fund institutions are amazing. I'm a great fan of SIDBI, but because of their own policy, they're able to put all kinds of restrictions to promote a certain development angle, which I think is great. But when we have 250 trillion rupees of non-public equity savings in the country from banks and insurance companies and 30 trillion of pension money and so on, we have no shortage of capital, as my friend Gopal Jain loves to say. Yet, when we drive on the brand new highway from wherever, Ahmedabad to Baroda or Bombay, the person who takes a part of the toll which we pay is a pension fund giving pension in Florida and California, not the pension fund giving the returns to India. And India has very serious yield issues. A little bit of money of pension in private equity, even if it's 5 or 10%, it can give double the yield that they are getting today. So
Right.
that 5-10% can give them nearly 0.6 to 0.8% overall yield return, or 10% in relative terms more return. So I feel that we need it for yield basis, but most importantly, we need these 100, 200 Ashvin Chaddas to come out more.
Right. So very valid points made there, Gopal. But I would say two things, that the investment culture has begun in the country with mutual funds, we have seen, and now people are looking for more diversification. And so the people are also looking for more avenues to put their capital to work. And on the other hand, in the last few years, I have seen a lot of influx of many managers, many family offices have really come in, and many erstwhile managers in public, in foreign funds, have set up their own shop, given the advantage of their experience there. So that is increasing, but maybe not at the pace at which we would like. On this note, we will slip into a short breather, but we'll come back and discuss more about the measures to be taken and what kind of a support that the government can give on Atmanirbharta in domestic fundraising. Stay tuned to Big Deal.